Hey everyone, and welcome to another episode of the Financial Advocate Podcast. This is your co-host Ryan Stark, along with my host Colin Meeks, and we are going to be talking about loss aversion and tying into some articles that we found. Doing another case study for you today. So, excuse me, Colin, why don't you go ahead and get us started with the first article?
All right, fun stuff here. Welcome everybody. And so October was a crazy volatile month in the stock market, and the reason that I wanted to just take a few minutes today to go through some psychology of investing and loss aversion and different angles that we've seen other advisors try to take in order to gain business. I just want to throw out some things to watch out for. But let's talk about this thing with loss aversion. And basically, what I mean by that is, people. The psychology of this is when they are making money or they are getting a gain. Does the pleasure of that gain outweigh the other side of it? So when you lose money, do you feel more pain than you would than the gain or the pleasure that you get from a gain? So I think I bungled that up pretty good there, but let me give you an example. So if you're walking down the street, Ryan, and you find a $20 bill on the sidewalk, how do you feel?
Pretty good.
Free $20, right?
Yeah, that's right.
Free $20, but not for the guy that dropped it. I mean, if you're walking down the street and you reach your hand in your pocket and you're looking for that $20 that you thought you had and it's not there,
Yep.
How do you feel?
Yeah, I would imagine being the person who dropped it, it would hurt more than the excitement I would feel by finding it.
Right, and I mean, we're all wired differently. I mean, we're all hardwired for this, but I mean, the bottom line is what I found and how this correlates to what it is that we do is that loss is more painful for most people, and it sticks around a lot longer than it does than finding that $20.
Yeah.
And that's just the bottom line. I mean, there's countless studies done with sports psychologists where there was a golfer, and I forget his name, years ago, and he was almost winning a major tournament every single time around for like 2 or 3 years, and like he finished second and third and fourth place, and really just gut-wrenching losses, and it really affected the guy. And he finally broke through and won a major golf tournament, and they were doing the interview, and I remember hearing this, is that he's like, after he won, how do you feel? He's like, I thought I would feel a lot more happy. I thought I would really enjoy this a lot better. He said, and it's really, winning this tournament's great, but it's nowhere near, the pain that I suffered in all the losses. So that's just the psychology of investing.
Yeah, I agree, and I can think of that in terms of doing jiu-jitsu as well. I had a tournament recently, and it's funny you mentioned that because I kind of felt the same thing. I thought I'd have this great flood of euphoria, and it was like, finally, I expected to win. And now that it finally happened, it wasn't like I climbed a mountain. It still reminded me, as I guess, of how many times I lost to get there. But it is just the psychology of it all.
Nothing like getting your butt kicked, huh?
Yeah, that's right. That's right.
And there are studies that suggested that losses are twice as powerful psychologically as the gains are, and that's just the way the world works. And the reason I bring this all up is that October being such a crazy month in the stock market, and with the market jumping all over the place, we fielded a lot of phone calls from I would say worried clients, but just concerned. And we didn't hear from them all year when things are when their portfolios are on the rise. It's like you just keep an eye on it and you get those statements and you look at that number and it's a little bit more every month. But the minute that thing drops, that's when people start to pay more attention.
Should we change anything? Should we adjust anything? Yeah, that's
right.
That's been one of the questions.
I mean, and that's the key. Again, getting back to our initial goal with people is to put that financial plan together, because we don't know what the market's going to do next week, next month, next quarter, next year, maybe not even the next 5 years. But we do know what our time horizons are, and we do know that if we need money in a certain period of time, that there are certain investments we're going to use, and there are certain investments that we're not going to use, and we try to bucket people's money so that we've got all those different bases covered. So it's kind of funny when you think about marketing. People, when the market does go down, everybody loves a sale. Everybody, we're looking at, I get this at 50% off, or you go on Amazon and you get free shipping, whatever the case may be. People their mind is hardwired to save money. But it seems, except for the stock market. And I don't know that we got any calls from anybody saying that they wanted to buy anything. this month, did we?
That is true, and I wonder if anybody has most of their money invested, so when it goes down, it's not like they have a big chunk of cash. But I know there are clients definitely who have some available and are doing, investing mostly with
Right.
us or outside and whatever. But it is true that you don't have anybody ever calling saying, the stocks are going down now they're more affordable. I know they're going to go back up
Right.
in the long run, so let's get moving on that strategy.
Right, and that's, you don't ever go into a store and say, oh, this is on sale, but I'm gonna wait till it goes back up to full price, and then,
That's right.
I'm a little bit worried I'm gonna do that, so.
That's right.
But again, this is all psychology. Investing is it's a full contact sport. It's, it's funny because I got a phone call from a potential new client this week, and she did a great job of grilling me. I mean, she's interviewing 2 or 3 other advisors. She just got a very large legal settlement, and she's, it's a lot of money, and she's doing her job to try to find things out. But, we talked about, she started down the roads of what kind of investments do you use, and I said, my answer to that was we don't even get to that to the 3rd, 4th, even 5th meeting with people, because we meet with 2 or 3 times to put together that plan to get to know you, to figure out your time horizons and your risk tolerance, and is finding $100 on the street does that cause you more pain or more pleasure than losing $100? We do with the whole risk tolerance thing. So it really does weigh into all this stuff. Does weigh into the psychology of it and how you go about it. But again, we always go back to that initial plan.
Yeah, and I think this is a really good time to look at your own statements and really look yourself in the mirror and see, like, what is your risk tolerance? How do you feel about this? This is something that I've been doing with my family members if they're wondering how things are invested, and I'll say, well, look at your statement right now. The market's been a little bit volatile. This is kind of what it does. How do you feel at this moment now that it's dropped? When you see that you lost $10,000, $20,000, are you sick to your stomach? Can you not sleep, or is it not that bad and you can tolerate it? And that's why I think it's almost like you can treat it like a test run. Obviously, we don't know. It could go down further. It could go up, and we're not sure. But when it goes down, really pay attention to your statements and see how you feel about it,
Right.
and go from there.
And it's the old thing, when you look at your statement on January 1st and say you have $1,000, I'll just use that as an example, and it goes up to $1,200 9 months later, and you're really happy, and then the next month it goes down to $1,150. Did you just lose $50, or did you make $150 this year? So it's like, it's just all in how you look at it, what those time horizons are, and it's all perspective. And that's not to say that what you're feeling and what you're seeing is not valid, but it's our job as financial advisors to sort of back you off of that and say, okay, let's think about this really, and what plan are we looking at, and is this money that is this the money that you're going to need next week? Well, no, it's not. And that's why we haven't invested this week. If it's money that you need next week, here it is, right? It's in the bank so that you can get it next week.
Right.
It's the psychology of, would you rather get a $5 discount or avoid a $5 surcharge? It's just crazy tricks that our minds always play on us.
Yeah, especially now when the market's been, flying for about 10 years. The only thing anybody remembers is '08 is the big drop, but nobody remembers the regular volatility that kind of comes with it. I guess in 15 maybe a little bit, but really it's been so consistent that everybody's looking at that market. That's that vehicle that just goes up, and when it goes down, something's wrong.
Yeah, and one of the coolest charts that I've ever seen, and they have these, any major brokerage house has them on their website, is it has the picture of the stock market, and then it's got all the world events tagged to it along the way. And every major event or catastrophe or good thing, bad thing, that just shows you that certain things happen in the market, but as a whole, it just sort of plugs along and does what it's always done. It's going to react negatively or positively to certain things, but it's normally short-term things, and you don't want to make long-term decisions based on those short-term occurrences.
Right.
So I think we've hit on everything we wanted to with the psychology of investing and loss aversion and risk adjusting and all those fancy investment terms. What I'd like to stress to you is, if you're listening to this and you just would like a second opinion on what you're doing, there's plenty of advisors out there that will do that for you. There are plenty of online programs that will, you can go plug your stuff in and it'll tell you how your investments are doing and fees and charges and performance and everything like that. If you'd like a more personal touch to that, Ryan and I are happy to do that for you. We have a process that we take people through called Complete Planning Review. And it not only looks at investments, it looks at everything. It looks at your insurances and your estate planning and your tax situation and your protection and your income goals and your everything you can imagine that would go into a financial plan. A lot of non-financial issues that a lot of other advisors won't bring up. We bring those up. So if you have an interest in that, please feel free to get in touch with us. We'll post some stuff under these show notes. But I think we've hit on some pretty good high notes today, Ryan. So I think that's it.
Okay, sounds good.
All right. So thanks for joining us for the Financial Advocate, and we will talk to you next time.